So on the agenda today, the main thing we'll be covering is Sanlam's underwriting philosophy and product offering. Okay, so like I said, the golden nuggets, 10 reasons why you guys should be using Sanlam Risk Solutions. And then lastly, we'll be finishing off with an introduction and overview of the Sanlam Wealth Bonus, which I think offers exceptional value to policyholders. And yeah, something that's unique in the marketplace today. So at Icon, we refer to Sanlam as our anchor tenant. And what I mean by that is Sanlam has got something for everyone. Okay, they've been around for over 100 years, and they play in many different markets. So you can get everything from funeral cover, okay, for the mass market, right the way through to sickness benefit and wealth bonus, which have been specifically designed for professionals, and everything in between. You know, risk, short term, through Sanlam. Obviously, we won't be speaking about that today. They've got a medical aid division, gap cover, and obviously risk as well. What we believe Sanlam does particularly well is cover for professionals. Okay, so they've aggressively gone after the PPS segment of the market. PPS and Sanlam have always kind of been arch enemies in the marketplace. As soon as PPS releases something, you know, Sanlam update their products to mimic it and vice versa. And so in the Sanlam world, professionals get access to special benefits, they get preferential pricing, they get additional wealth bonus allocations as well. Okay, so I know PPS isn't a preferred provider in the LPI space. So I think every single professional client that you come across, Sanlam should definitely be discussed, you know, or at least put on the table. I honestly do believe that they are the leaders in that space. Okay, so in terms of the product offering at Sanlam, so a full suite of products: life cover, funeral cover, lump sum disability, impairment benefits, an incredibly comprehensive severe illness offering, the most comprehensive accidental cover range as well, including accidental income protection, and then income protection, so both for professionals and non-professionals. I'll be delving into each of these product ranges in more detail, and like I said, giving you those golden nuggets of what Sanlam does best for each of the different product lines. In addition to that, we'll be talking about wealth bonus. Okay, so PPS has their apportionment account or their profit share account, and Sanlam have the wealth bonus. And again, it's a boost that you get at retirement, just for being a long-standing loyal Sanlam policyholder. That applies to both the risk benefits and some of the investment products, but today we're just focusing on risk. Okay, so I won't be talking about the wealth bonus on investments. And I think also worth noting, for the last 3 years in a row, Sanlam have been voted the FIA long-term insurer of the year. Okay, so that's, you know, a huge feather in Sanlam's cap. I don't think they've announced the winner for 2025, but it'll be interesting to see if they can make it 4 in a row. Okay, so look, no insurer does everything the best, but I can honestly say, having worked with Sanlam for the last 8 years, they do a lot right. They may not be the sexiest brand, they may not have the most, you know, efficient, streamlined systems, but I think when it comes to claim stage, they honor their word and they do have consistently the best claim stats in the market. If you look at the Ombuds review each year. Okay, so just to get into the nitty-gritty and you know, really start kind of digging out these golden nuggets, the first thing that I want to touch on is Sanlam's underwriting philosophy. So Sanlam pioneered this philosophy early on, and I think the market is slowly starting to catch up. So this isn't unique in the market. There are other insurers that offer this. But essentially what Sanlam say with their philosophy is they will underwrite you once upfront, and they will never underwrite you again. Okay, so you never have to notify Sanlam of any change in your in your personal circumstances, whether that's changing occupations, starting smoking, taking up any risky activities. So you want to become a skydiver, or you go through a midlife crisis and you want to start summiting the highest mountains in the world, or you're a person that wants to go and live overseas. None of those things will affect your cover. Okay, and I think that that's really awesome as a financial advisor, because it gives you the peace of mind and security that if for whatever reason you don't review a client's policy in a year and their circumstances do change, they will still be comprehensively covered. And I think this is most notable when it comes to disability benefits, especially income protection. Okay, so I've got a story of this in action from a few years ago, and it's probably one of the craziest examples of this. We had an advisor in the Cape, and she had a client who was a lawyer. And he, just as I've said, had a bit of a midlife crisis. He started flying helicopters. Okay, so he obviously made some good money being a lawyer. And as many people do, they kind of get into the world of aviation. So he got his pilot's license. And then he decided to quit his job and join the United Nations, flying helicopters. And then he decided to move to Mali, which is a conflict zone in Central Africa. There's a civil war raging as we speak. So he packed up and left, moved to Mali, and he was literally expatriating like bodies from these war zones for the United Nations in helicopters. He had a Sanlam sickness benefit with a 7-day waiting period. We sent a notification to Sanlam informing them of this change, and they responded to say, "Thank you for notifying us. Your client's cover remains unchanged, and he will be covered as a United Nations helicopter pilot with sickness benefit with a 7-day waiting period." Okay, so what that means is if for any reason he couldn't perform that occupation for 7 days or longer, he could claim. And I think that that's really, really powerful. Okay, so a really great philosophy. It does just give clients peace of mind, and of course you as advisors as well. Okay, so please keep that in mind. I do think it's a big, big selling point when it comes to Sanlam products. Okay, next I'm just going to touch on the product options at Sanlam. So with Sanlam, there's always a lot of choice, sometimes maybe too much choice, actually, and things can become a bit overwhelming. But there are 3 product options within the Sanlam universe. Essentially, what this means is that there's 3 different risk platforms. Okay, I look at these platforms almost like investment platforms. The products that go on them are exactly the same. Okay, so life cover on Premier is exactly the same as life cover on Classic. Same with critical illness, same with disability benefits. Premier, however, charges a slightly higher premium because you have additional optionality and flexibility when it comes to the way you can structure your policy. Okay, so on Premier, there's different guarantee terms. There's different funding patterns. Wealth bonus is automatically included. And then there are some niche benefits that are only available on Premier and not available on Classic. Okay, so some examples there would be income protection. Income protection is only available on Premier, it's not available on Classic. Okay. Then you have Premier Smart. So Premier Smart is exactly the same as Premier, just that plugged into this product option is a new underwriting platform. So it's new technology that was recently launched last year, and this streamlines the underwriting process. Okay, so all of your health declarations can be done online. The question sets are reflexive. It's plugged into third-party data sources. Okay, so very often the underwriting requirements will be less stringent because it's picking up information that exists on the client already. It uses the same facial recognition as Momentum's Kimi product, if you're familiar with that. Okay, so it does do some screening up front, and in return for that, you will get a 5% premium discount for the first 3 years of the policy. Thereafter, you'll have to redo the screening. Okay, so with Sanlam, there's a few different ways to apply for business. You can either do the auto NIB process, you can submit a paper-based application, there's tele-underwriting if you want to use tele-underwriting, and now there is the new Premier Smart process as well. Okay, so I think we all want to move paperless, most of us at least. So Sanlam, even though they are considered to be quite old and big and sometimes move slower than the rest of the market, they have the exact same offering now. Okay, and again, if we want to go into more detail with this and get a demo, we're more than happy to do that. Okay, so we've spoken about the underwriting philosophy, we've spoken about the different product options, we've spoken about Premier Smart. Now let's get into the risk benefits. So what does Sanlam offer from a death perspective? A lot. Okay, so you'll notice that kind of choice is kind of the theme here with Sanlam, and a number of different death benefits to meet different needs. Okay, everyone says, you know, life cover is life cover. Apparently, it isn't always. So in the Sanlam universe, you've got on your far left normal lump sum life cover. Okay, so that will pay on death. Then you have death income. So death income is something that we believe very strongly, or we're quite passionate about at Icon, because it overcomes a number of planning and behavioral risks. It's also a lot more affordable than lump sum life cover. Okay, so from an income replacement perspective, death income is a really good option. Sanlam offers it both on a fixed term or based on a cease age basis. Okay. Then we have immediate expenses. So immediate expenses is estate liquidity. A lot of companies have this built into the life cover. It's almost like a built-in funeral cover benefit. And with Sanlam, they do not have it built in. You can add it to your policy for a small additional premium, and then it won't accelerate your life cover. Okay, so it's separate to the death benefit. There is estate expenses. Okay, so in your guys' world, you probably won't use this because you have the LPP, but essentially fulfills the same need. Okay, so liquidity of the estate, it's essentially just a separate lump sum with the estate nominated as the beneficiary. Okay, we have funeral cover. So very often we get advisors looking for funeral cover. Sanlam is the only company that we have that offers true funeral cover benefits. Okay, so you can take these out for yourself, your immediate family, as well as your extended family. Okay, and it's up to 60,000 Rand for extended family, and 100,000 Rand for the life assured and their own family. Okay, no medical underwriting. It must just be taken out with one other benefit on the policy.
Sorry, okay, Jonathan. Sorry, Jonathan, just wanted to find out, what is the latest age of entry on the funeral benefit?
It is 79, I believe, Mark.
79 age next birthday, or 79, 80 age next birthday?
80 next birthday, I believe.
Okay.
All right. I'll just can you double check that for me, Andy?
Sorry, thanks very much.
Waiting period is 6 months suicide, 12 months natural causes. Okay. Okay, then we have first death. 80 age next birthday. 80, yeah, Mark, 80 age next birthday, so 79.
Thank you very much.
Okay, then first death. So I think we've all heard of last death, which is a really good benefit for estate fees. Okay, first death is a really good solution for liability cover. So where you have joint liability, let's say husband and wife, 2 spouses, you buy a house, you take out a bond together, you both sign surety for it. in the event of you signing that bond, you need cover. You need bond cover. Okay. What typically ends up happening is each life will take out cover separately. Now that's a bit silly though. Okay, because you're double insuring yourself for one liability. So essentially you have doubled the amount of cover that you actually need. Sanlam offer first death, where in the event of the first dying, that cover will pay out. The bond can be settled, and then that policy will lapse. Okay. And then lastly, we have accidental death cover. So this can be quoted on upfront. It's not an underwriting solution. And this is obviously for people who are medically uninsurable. They've recently increased the cover amounts to 5 million with a cease age of 70. Okay, so it is not offered on a whole of life basis. Okay, so that's the very comprehensive life cover offering from Sanlam's side. Now getting a bit more interesting, we're going to delve into disability benefits. But I truly believe that Sanlam has probably the most comprehensive lump sum disability offering in the market. Okay, I'm not particularly, I'm not a huge advocate for lump sum disability. I think income protection is far, far more important. But if you are looking for disability benefits on a lump sum basis, Sanlam offer some really unique value-added benefits to their capital disability benefits. So in the Sanlam universe, there are 4 main disability benefits. And again, these all meet slightly different needs. Okay, so comprehensive disability, this will only pay out at 100%. It covers impairment and own occupational disability. Okay, everything at Sanlam today is only own occupational disability based. There's no own or similar option. Okay, so you don't need to worry about that. But the comprehensive disability benefit is what we would typically use for business assurance. Why? Because it only pays out at 100%. What you don't want to have happen, if, for example, you have a buy and sell, you have a comprehensive disability plus benefit, which would be this one, and that pays impairments from a 5% severity. Now, you go ahead and you lose 2 fingers on your non-dominant hand, which is a 5% payout. You don't want to be forced to sell equity that you hold because you've lost 2 fingers. You can still perform your occupation perfectly well, most likely. Okay, so comprehensive disability benefit only 100%, and that's mainly for business assurance. Then for personal cover, comprehensive disability plus benefit. This now, as I've said, enables lower severity impairments to be paid from a 5% severity upwards. Okay, so I think one thing that we should all consider quite carefully when we're selecting a disability benefit is from what percentage does the impairment pay? The lower the severity, the better. Okay, because it increases your likelihood of a claim event. So, like I said, loss of 2 fingers on your non-dominant hand. There's a couple of other examples here. So loss of vision in one eye, loss of use of a leg, hip replacement, arrhythmia with moderate impairment. Those would all be considered less severe impairments. So Sanlam pay from a 5% severity, some companies from a 25% severity, and other companies only from a 50% severity upwards. Okay, so the threshold for a claim with Sanlam, as soon as you have the plus benefit, is very, very low. And then you have the elite disability. So now this is where we get some significant bells and whistles added on. There's boosted payouts. Clients can qualify for up to 250% of the sum assured under elite disability. This is another example of a benefit that's only available on the Premier platform. Okay. It's comparable. I don't know the Discovery range names. They always elude me. But the 200 plus Discovery benefit, lifetime 200 plus, if you've got that on the disability side with Discovery, this would be your equivalent benefit with Sanlam. And then lastly, comprehensive impairment. So now this does not have any occupational underpin. It only covers permanent impairment. And this would be for clients who are occupationally uninsurable or have high risk occupations where you're unable or you do not qualify for occupational disability cover. I think this whole thing, especially with lump sum disability, is, I think it can be a bit of a red herring. I mean, generally speaking, unless you have a very specialized occupation, your occupational disability will, in most cases, if not all cases, depending on what type of work you do, be caused by a permanent impairment. Okay, so I think everyone on this call, working in financial services, whether you're an advisor or a consultant or an administrator, we can all do our job sitting from a desk behind a computer. Okay, and in order to be rendered permanently occupationally disabled, it would take quite a severe impairment event to make that happen. Okay, so maybe just a question or a seed to kind of sow is, on the capital disability side, is an occupational underpin as important or valuable as we think it is, for most occupations at least? I think impairment is probably a lot more important. Then just to unpack the special features that are built into these products. Okay, so every product has a slightly different combination of these, and I'll get into those combinations next. Elite has all of them. Okay, so first of all, boosted payouts. So this is applicable from the impairment side of things, where from a 50% impairment, you'll be boosted up to a 100% claim payment. Okay, so you get your top up with critical illness products. This is essentially the top up of the disability world. Okay. Extended occupation disability. So some companies call this sabbatical cover. So let me paint a picture. You are, you're working, and I mean, we've just had a colleague now who's been on paternity leave for the last few weeks. But let's say you have a child and you decide, you know what, I want to take a year off. I want to focus on being a mother or a father. I want to spend time with my child, and you take a sabbatical. What happens if you become occupationally disabled during that time? God forbid you're involved in an accident or you get sick and you can never return to work. A lot of companies would turn around and say, sorry, you weren't working, you were on sabbatical. And technically, we can't provide occupational cover to someone who's not employed. So what Sanlam say on both their disability and their income protection is that for 12 months, up to 12 months, they will cover you occupationally if you stop working for any reason other than retirement, and you still intend on returning back to work someday. If something happens to you, they will assess you on a disability basis, occupational disability basis, which I think is fair. Okay. The next benefit is temporary incapacity cover. So, I mean, anyone on the call tell me what the biggest problem with lump sum disability is? Any views on this? I said I'm not a big advocate for lump sum disability.
It runs out.
That's one of them. For me, the biggest issue is that it requires permanency before a claim can be paid. Permanency is notoriously difficult to prove. Okay, unless it's something very cut and dry, it can take years to determine permanency, okay, for a disability claim. So what Sanlam have said is we will actually pay out 10% of the cover amount, even if you are temporarily disabled. Okay, so the way this works is they have a long list of definitions and waiting periods for each of those. The waiting periods range from 2 to 3 months. If you are incapacitated, or i.e. cannot work as a result of one of those conditions for the stipulated waiting period, they will pay out 10% of your cover amount. Okay. Hopefully you got income protection, which will pay out over and above this. But I think it's a really, really nice add-on to the disability offering, and I don't think anyone else has anything like it. Okay, then you have your prosthesis booster. So prosthesis booster pays out up to 150% additional cover over and above your sum assured if you require prosthetics. Okay, so that percentage is determined on the types of prosthetics you need. Obviously, prosthetics are very expensive and they need to be replaced, semi-regularly. I would say every 5 to 10 years, you probably need to get a new prosthetic. Not just because they wear out, but because the technology in this space is developing at such a rapid pace. So that is included with the elite disability only. Built-in child cover. So again, if I can compare this to critical illness, it's similar to your child's severe illness benefit, but it's built into the disability and it covers a number of illnesses and impairments. Okay, and it will pay out 10% of the parent's benefit capped at $500,000. If both parents have the benefit, it will pay out on both. Okay, and this covers the child from the age of 1 to the age of 18. And then lastly, future cover for young lives. Okay, so the rationale behind this particular benefit is young people generally need disability benefits from an early age. Okay, technically from the day you start working, you should get income protection. Capital disability, I'm not so sure, but with Sanlam, what they say, if you are below the age of 35 and you buy disability benefits, this also applies to income protection. You can, on certain life events, purchase the same amount of life cover with no medical underwriting. Okay. And again, this is because generally young people don't need life cover until they take out a bond or accrue debt or have a child or get married. Okay. So this table shows you what benefit or special feature is built into each of the disability benefits. So we can see elite disability, it ticks all the boxes. Comprehensive disability plus, which we would typically quote because that's, kind of in line with the rest of the market, ticks most of those boxes, just not boosted payouts, prosthesis booster, or the child cover benefit. But still some really, really nice added extras that come part and parcel with the Sanlam disability offering. Okay. Any questions on cap dis before we move on to income protection?
No, thank you.
Okay, so income protection benefits. This is quite a busy slide. Just want to try and get my little laser pointer here. Okay, so in the income protection space with Sanlam, they've built their product around temporary and extended income. Okay, so temporary will pay for the first 24 months, and that is depicted here in this first column. From month 25, we have our long-term income protection needs. Okay, and that's in this third column here. Sanlam distinguish between professionals or graduates and non-professionals. Okay, so professionals up here, that's anyone with a 3-year undergrad degree or a 4-year diploma or higher will be considered a professional in the eyes of Sanlam. For PPS, it's a 4-year degree or higher to qualify for PPS benefits. Okay, so what do professionals or graduates qualify for with Sanlam on the income protector side of things? They qualify for this benefit here, the sickness benefit. Okay, and I I'm a huge advocate of the Sanlam sickness benefit. I have this benefit myself, purely because of the ease of claiming and the affordability. This will cover clients for the first 24 months of claim, like I said, okay. And it is not linked to occupational disability. It's linked to being booked off work by a medical professional. Okay, so you go, you see your family doctor, and you've got the flu, or you've got a dislocated ankle or a sprained ankle or pneumonia, whatever it might be. They fill out a 2-page claim form, submitted to Sanlam, and your claim will be processed and approved. So long as there's no shady stuff going on and your doctor's booked you off work for 6 months for a sore throat. Okay, so essentially you don't need to undergo any kind of occupational assessments. You don't need to see an occupational therapist. It's very, very quick, painless, and easy. And there's a whole bunch of other reasons which I'll get into on the next slide. Okay, for non-professionals, the temporary income protector is available. And there we cover clients for own occupational disability and permanent impairment. We have impairment income, again, for high-risk occupations. So we can see here occupationally uninsurable, or maybe even unemployed people. Okay, so it might be a stay-at-home dad, stay-at-home mom, a student. Yeah, they also need impairment income most of the time. You think about a homemaker. What do? They fulfill a fundamental role in the household. They're generally the ones who are, picking up kids, dropping off kids, preparing food, helping with homework. It's a really valuable role. And if you can't perform those things, you're going to have to pay someone to. You're going to need an au pair or a nanny. That costs money. So impairment income is a great conversation for those types of people. We then also have accidental income protection. So I don't know if anyone's seen accidental income protection before, but as far as I know, Sanlam are the only company that offer it. So with underwriting the way it is today, it is so strict. I would say about 3 to 4 out of every 10 policies that we get applications for don't get onto the books. What are we offering to those people? I mean, Carl always says, no one should leave the LPI without a solution in place. And with Sanlam, 10 out of 10 clients that you see, you can offer them something, even if it's an interim solution. Okay, so a client is unhealthy, they get declined for comprehensive benefits. We will always put the accidental income protection or accidental benefit offer on the table for you. And I strongly suggest you position that to your client as something for the interim whilst they solve or sort out their health issues. Okay, and then on the long-term income protection needs, we've got extended income protection. Okay, so whether you're a professional or a non-professional, this will take over from month 25 onwards and pay either to your cease age or whole of life. Okay, so there is a whole of life benefit option as well. Same with impairment, same with accidental income protection. Okay, so specific niche income solutions for professionals, non-professionals, occupationally uninsured people, or even unemployed people, and medically uninsurable clients. Literally something for every single segment of the market. Okay, and then what's unique about sickness income? So we've all heard, we often hear, I do at least, maybe you don't, PPS's sickness benefit is the best. You don't get better than PPS's sickness income. And I must agree, I think it's a great benefit, but it's quite inaccessible. Okay, so a 4-year degree is, most clients don't have 4-year degrees. A 3-year degree, we come across a lot more people that do have 3-year degrees or 4-year diplomas. The sickness income benefit with Sanlam is exactly the same as PPS's sickness benefit. It was actually designed and developed by the same product actuary. And this is the highlights reel. Okay, so waiting periods, 7, 14-day, and 30-day. There is no aggregation at any stage whilst in claim on your sickness benefit. Whether that's against active income or other insurance claim payments. Okay, it covers gross professional income, GPI. And this is an interesting one. I'm not sure how many of you deal with business owners, but business owners often have creative accounting practices for tax avoidance. And it becomes an issue when trying to purchase income protection, or it can with some companies. So Sanlam have been quite smart about this, and they've said, we will consider retained profits within a business part of your professional income. So if you're declaring 50 grand a month's worth of income, but your business is generating R1 million worth of profits per month, okay, Sanlam would see your income as 1,050,000. They're not just going to look at your IRP5 or your IT34. Okay, obviously we need to get management accounts, okay, or audited financials to be able to determine that, but it makes it much easier to sufficiently insure these types of people. We can also insure business overhead expenses through the sickness benefit, okay, which is unique to Sanlam. Usually there's a separate business overheads product, and those products are generally not the most comprehensive income benefits, okay? It's great for key person cover. There is a built-in female benefit, so this is specifically for pregnancy and pregnancy-related complications. So really interestingly, if you are a female and you have a sickness benefit with a 7-day waiting period, and you elect to have a C-section during childbirth, you can actually claim for 14 days of income on your sickness benefit. Okay, and this just speaks to the nature of the sickness income. It's not linked to occupational disability. It's linked to being placed on bed rest by a medical professional. Okay, we've spoken about the sabbatical benefits. Claims will be backdated on a 7-day waiting period. There's no fixed period as to when you can submit a claim. So with some companies, they'll say, there's a 12-month validity period or a 24-month validity period. If you were booked off work and you forgot about it, and 10 years later, you spoke to your advisor and said, oh, wait, I was actually booked off work for a month 10 years ago, you can submit that claim then, and Sanlam will still process it and pay it if it meets the claim criteria. Okay, there's an automatic premium waiver whilst in claim. And then if you have back or psychological exclusions, Sanlam will discount your premium for those. Because if you're not getting the full breadth of cover, why should you pay the same premium? Okay, I'm wary of time. So I just want to quickly go through the temporary income. Temporary income, like I said, it covers own occupational disability, permanent impairment, and a number of guaranteed payment events. Okay, so these are events that if you can prove they took place, Sanlam will pay your income for a predetermined amount of time. 1 month, 2 months, or 3 months. Okay, there's a very nice catch-all sick leave event built into this. So essentially, the first 3 months of your temporary income protector will be sickness benefit, exactly the same as the sickness benefit I've just explained. From month 4 onwards, it'll be assessed on a temporary income basis, which is occupational disability and impairment. Okay, but stats show us about 85% to 90% of claims last less than 3 months. Okay, so they'll be caught by that sick leave catch-all. One thing that's unique about Sanlam's income benefits is the age-rated premium pattern. Okay, so I wanted to bring this up again. It's one of Sanlam's best kept secrets. So what what happens here, and it's only on income benefits, not on lump sum benefits, you'll see that the age-rated increase is banded. So up to the age of 29, your base increase will be 4%. It then increases by 1% every 4 to 5 years until between the ages of 45 to 56, your base increase will be 8%. But then you'll see something interesting happens. Your premium starts to increase at a decreasing rate. So the age-related nature actually switches and starts to decrease over time. Until from age 60 onwards, your premium will convert to a level premium pattern. I think that's super cool. So if you are quoting for people 55 around there or older, always quote income benefits on an age-rated premium pattern. You'll get the benefit of the cheaper age-rated premium up front, but from age 60 onwards, it will behave exactly the same as a level. So if you quote level and age-rated for a 60-year-old, essentially that premium will behave in the same manner, but the age-rated will be cheaper. And not many people are aware of that, and not many people take that or use that to their advantage. Okay. So something else that's quite unique with Sanlam. Just a couple of optional rider benefits with income benefits at Sanlam. Okay, so on your sickness benefit and temporary income protection, you have two non-underwritten benefits called the child protector and the spouse protector. So these will cover your child or children and your spouse against specific impairments and illnesses and death. Okay, so if your child or spouse becomes impaired, is diagnosed with one of the listed severe illnesses, or if they pass away, it will pay your income for a period of 6 months. And the thinking here is, obviously that's a very sad, traumatic time for any family to go through. If you're the breadwinner, or you will be the sole breadwinner if your spouse passes away, after that, you can take 6 months of unpaid leave and spend that time with your family, kind of bonding and healing and mourning through that difficult time. On sickness benefit, only with a 7-day or 14-day waiting period, there's something called the hospital protector. If anyone's familiar with PPS's admittance rider benefit, this is exactly the same. And essentially, if you are hospitalized for 4 or more consecutive days, Sanlam will match your income day for day that you're in hospital. Okay, so let's say you're booked off work for 20 days because of an accident, and you're in hospital for 10 of those 20 days. If you have the hospital protector, you'll be paid out 10 days of income for being hospitalized and 20 days of income for being booked off work. In total, you'll receive 30 days of income. If you didn't have the hospital protector, you only would have received 20 days of income. Okay, and then the last optional rider benefit with Sanlam's income benefits is the lump sum conversion option. So this is only available on extended income protection. And I know everyone raves about BrightRock's claim stage optionality. Obviously, they were the ones who kind of, came up with this concept. So, I mean, it's only fair that they take like the recognition for it. But again, the markets have caught up now. So Sanlam offers this as well. It must be selected at quote stage. And essentially, if you are permanently disabled or impaired at 100%, you can, at any stage whilst in claim, convert some or all of your future income to a lump sum. And if you do die before the cease age on your policy, any unpaid income will be paid to your estate as a lump sum, if you haven't already used the lump sum conversion option. Okay. Any questions on income benefits before we move on? Cool. We've got severe illness and then lastly, wealth bonus. So we're almost done. Okay, so Sanlam's severe illness offering, again, is incredibly broad with a lot of choice. And I personally believe severe illness is often oversold. Okay, it's a very emotive purchase. We all know someone who's been diagnosed or suffered from a severe illness, but severe illness is incredibly expensive. So I think through Sanlam's comprehensive offering, you are able to create a more bespoke, tailored severe illness offering that gives clients peace of mind and assurance, that if they are diagnosed with a severe illness, they'll be properly covered, but you can also create some premium savings in the process. For all of these benefits, you'll see there's an impact range, which is a tiered payout, and there's a plus range, which means all of your ski dep events and other 25 and 50% claims will be topped up to 100%. Okay, so let's start from the top. There's the comprehensive severe illness benefit, which is the flagship product offering at Sanlam. Covers 300 specified illnesses, and yeah, up there with the most elite comprehensive products in the market. Then what we've got are two niche products. So there's a cancer benefit and a cardiovascular benefit. So these are standalone products that can be purchased on their own, or they can supplement your comprehensive severe illness cover. And obviously they do what they say they do. So cancer is a very comprehensive cancer package. It's all of the cancer definitions that are just stripped out of the comprehensive severe illness product. Anyone want to give a guess what percentage of claims are cancer claims for severe illness in the market?
60%. 70%.
Yeah.
80%.
70% of severe illness claims are cancer. It varies slightly from company to company, but cancer claims, it's a overwhelming majority of severe illness claim events. And it seems to be increasing, which is scary. The other kind of 20%, I'd say, 20-25% are cardiovascular. So there you've got, not cancer, strokes, heart attacks, and all of your kind of heart surgeries. Coronary artery bypass grafts, all these keyhole surgeries, valve replacements, and those are then covered through the cardiovascular benefit with Sanlam. These are not only giving you guys an opportunity to have a differentiated conversation with your clients, to ask the question, are there any illnesses that you're particularly worried about? You're worried about cancer? Well, did you know Sanlam has a specialized cancer benefit? Or, heart disease runs in my family. Okay, well then let's top up your critical illness with some cardiovascular cover. It also creates some meaningful underwriting solutions for your clients. Diabetics. Okay, so diabetes is also on the rise. It's particularly common in the Indian community. It's very hereditary in that space. But KZN, it's a big problem from an underwriting perspective. And people with diabetes typically do not qualify for severe illness. I don't think I've ever seen an instance of a diabetic, even a well-controlled diabetic, getting severe illness cover. But through Sanlam, we can offer them cancer cover. Okay, because diabetes does not increase your likelihood of cancer, but you're still covering them for a meaningful amount of risk. Okay, with that 60 to 70% of severe illnesses being cancer claims, and you will not find a more comprehensive standalone cancer benefit in the market. Okay, so again, let's always remember Carl's saying, clients should never leave the LPI without some kind of solution in place. Don't forget about Sanlam's cancer benefit. We then have child illness and injury. Okay, so a lot of companies build this into the comprehensive product. But what happens then is you have cross-subsidization. So for example, I don't have children, but a small sliver of my premium, if I have built-in child illness and injury cover within my benefit, will be for that offering. Okay, obviously, if you spread it across tens of thousands of policyholders, it doesn't make a huge impact. But Sanlam decided, rather to keep the pricing fair and clean, and for people who do have children and want that benefit, they can add it onto their policy. Then you have cord red disease. Okay, and I think people are so dead scared of anything that has the word core in its name. I think that this benefit offers a huge amount of value. It covers all of the SCIDEP events comprehensively: cancer, stroke, heart attack, and heart bypass surgery, but it does so at about 60% of the premium that the comprehensive benefit charges. And again, you can blend this into your solution. So you can have some comprehensive and some core. Okay, so if you get cancer, you're paid out under both. But if you have a, really minor illness, which is a 5 or a 10% payout, you'll only be paid out underneath under the comprehensive cover. And then there's lastly severe illness income. Okay, so it covers all of the same conditions as the comprehensive severe illness. It just does so on an income basis rather than a lump sum basis. Okay, and then just a bit more info on the child illness and injury. It's a standalone benefit, covers 81 specific child events, and the maximum cover amount is R1 million. Okay, a couple of things that I have not mentioned just about the comprehensive severe illness benefit. It covers a significant list of impairments and injuries. Okay, so next time you're selling lump sum disability, maybe think twice about offering lump sum disability, maybe increase the severe illness benefit instead. I said how I think most disabilities for people who work standard occupations are impairment based. With severe illness, you're still covered for impairment, plus all of the other stuff. Or you won't be able to buy the same amount because severe illness will be more expensive, but it does increase the likelihood of a claim. And I think it offers better value. So just another idea that I'm throwing out there. This benefit covers all stage 0 cancers. So very important, most companies offer an exhaustive list of stage 0 cancers. It's usually your most common ones, which are like prostate and breast cancer. Sanlam, they have a catch-all early stage cancer benefit that pays out up to 15% of the cover amount. And that's for everything TONOMO, which is the grading for cancers. And then catch-all claim events, which is based on activities of daily living. Okay, I just want to skip over these slides because we are about to run out of time, and I just want to touch on wealth bonus. This just gives a nice overview of the difference between the comprehensive impact and the comprehensive plus. So the plus range, this just boosts your payouts to 100% in more instances, whereas the impact range is severity based. Okay, so lastly, shared value. Okay, so shared value speaks to Sanlam's philosophy or approach of giving loyal, long-standing clients more value back if they keep paying their policies over their lifetime. It's also to encourage responsible financial behavior, and that is all done in the form of the wealth bonus. Okay, so the wealth bonus is a lump sum paid to you either at age 65 or 70, depending on how you've set your policy up. There is a wealth bonus booster. Okay, so that's for qualifying professionals and graduates. So anyone with a 3-year degree or a 4-year diploma or higher, and they must have 2 qualifying benefits. 1 risk, 1 RA. Okay, and if they have 2, they'll get up to 10% extra wealth bonus at retirement, in addition to the wealth bonus on their RA and the wealth bonus on their risk policy. We then have cashback. Okay, so this is an optional add-on. You pay 35% extra on your premium, and you will get all of your premiums back after 15 years. All of your base premiums back after 15 years. Large cover discounts. Okay, so up to 6% discount on your premium for large cover amounts, which aren't that large. You know, that applies from 2 million upwards. We have reality. So reality is Sanlam's version of vitality or multiply. There's 3 tiers: bronze, silver, and gold. On the gold tier, clients get up to 30% discount on their risk premium. And they won't pay any management fees on their investments for in-house funds. And then Sanlam Protector Umbrella Trust. Okay, so this is if you nominate any beneficiaries, any minors as beneficiaries, those funds will be administered by the Sanlam Umbrella Trust. Okay, but I know that you guys have that all covered through Capital Legacy and the LPP. So what is wealth bonus? Okay, so like I said, it rewards clients for being properly covered and staying properly covered. Okay, paying their premiums until the age of 65 or 70. This does not matter if you've claimed on your policy. All you need to do is still pay your premium up until the unlocking date. What do you pay for the wealth bonus? You don't pay anything. Okay, it's automatically included in all Premier policies at no additional premium. So what is the wealth bonus based off of? Okay, so it's based off of your monthly premium. So every time you pay your premium, Sanlam will match that premium based on a sliding scale. That sliding scale is based on your age at the time. Okay, so from the age of 18 to 33, they will match 100% of your premium. That will decrease every 2 to 3 years by 5% until the age of 61. And from 61 onwards, Sanlam will match 25% of your premium. Okay. These premiums are paid into a notional portfolio. So it's not an investment. They call it a notional portfolio. And that notional portfolio will be linked to your policy. It will be invested. Okay, it will grow with market-related interest, and it will pay out tax-free. So there's no tax liability in the hands of the policyholder. 5% vests or unlocks every 5 years. So whatever's banked, whenever you pull a policy schedule, you'll see wealth bonus, 100,000 Rand. Okay, in 5 years, whatever the value is, let's say it's 100,000 Rand, 5% will vest. That means 5,000 Rand will be made available to you. You can withdraw it or you can leave it in your wealth bonus account. If you don't withdraw it and you cancel your policy or you pass away or you claim and your policy ceases, anything that's vested or unlocked will be paid out to you then, if it hasn't been withdrawn already. The full wealth bonus will unlock at the age of 70. Okay, so in this little graph, you can see the blue amounts are the 5% that are unlocking, with the full amount unlocking at the age of 70. And they have something called the early access option, or EAO. Here you pay 2 to 5% extra. And in this case, your wealth bonus will unlock 5 years earlier at the age of 65. Okay, so giving you earlier access to your wealth bonus account. So let's look at it in action. Okay, let's use some scenarios here. Every time we do a quote, the wealth bonus illustration will be on page 4, I think it is. Okay, so that's the projected wealth bonus at the nominated unlocking date. So it's there, rands and cents. But for this example, we're going to use a male, 35 years old, rate group 4, so that's based on his occupation, education, and income. His premium pattern is a fixed 5% compulsory. His cover is level, and he has 5 million rands worth of life cover and 3 million rands worth of disability. Okay, we're assuming that the wealth bonus account will grow at 4.5% per annum. Okay, so that's kind of like baseline CPI today. No real growth in the wealth bonus account. We can see down here, his premium is 1,139 rand per month. At age 70, the wealth bonus payout will be 1,067,000 rand. But let's add on cash back. Okay, so we can see this is wealth bonus plus cash back. So there's an extra 35% payable for the cashback benefit, making the premium 1,537 rand. Okay. At age 70, the client would have received 2.3 million rand wealth bonus payout. They still would have got all of their premiums back after 15 years with the cashback. With the early access option, okay, so this is wealth bonus plus EAO. The premium is 45 rand more. Obviously, because the term is shorter, the wealth bonus will be slightly lower, 814,000. But with cashback, just over 1.8 million at the age of 65. So I think this is a really nice supplement to a client's retirement. Okay, it's not for everyone. It should not be positioned or sold as an investment. But if you're going to be paying for risk insurance somewhere else and you're not getting anything back at the age of 65, then I would seriously reconsider offering them the Sanlam product with the wealth bonus. Okay, if you have an RA, those wealth bonus amounts are even higher. Plus, you're also receiving a wealth bonus on the retirement side. Okay, on the premise that the client's policy is active and in force at the age of 65 or 70 when these payouts happen. Obviously, it's not guaranteed, it's not a given, but I think most clients, if not all clients, require some cover up until the age of 65 or 70. Okay, so that's my story for today, everyone. I hope you all learned something. I hope there were some golden nuggets that you found valuable. And yeah, I'm not sure if there's any questions. Everyone, all good?
All good, thank you.
Thanks.
All good, thank you.
Thanks, Jonathan.
Thanks.
If you have any questions, please, yeah, chat to your solution specialists. We can unpack these things in more detail. I think especially when we've got quotes and client case studies in front of us, we can remind you of all of these things and dig a bit deeper. But I appreciate your time, and I'll catch you next time.
Thanks, Jonathan.
Thanks a lot. Have a good one.
You too. Bye.
Jonathan, can you send us this?
Yes,
The recording.
the recording. Sure thing.
Is
We'll
this
send out the recording.
is the session
Sorry?
recorded?
Yes, the session was recorded.
Yeah, I would like to, if I want to just relook at something, if you can maybe send it.
Cool. I'll send the recording and I'll send the slideshow to everyone. And then, yeah, if you've ever got any questions, give me a call, Rudy.
Cool. Thanks a lot, man. Appreciate it.
Awesome. Thanks, Abe.
Bye.
Cheers.
With the expertise of sitting with clients,